Hello, Ashwin.
How are
Happy New
you?
Year.
You
It's
too.
2 sleeps away to the Lunar New Year of the Tiger. And I'm hoping that we're going to roar into the year with abundance and prosperity.
Yes, definitely.
Well, the beginning of the year didn't pan out too well because, as you said in the last show, beginnings are always uncertain and one should, not panic. On Monday, January 24th, the markets bottomed out when the Dow dropped more than 1,000 points and then bounced back to close at a 99-point gain for the first time ever. The greatest paradox, retail investors cut losses on this Dow's drop, and
Very
this
sad.
is
Very sad.
this is so unfortunate, Ashwin,
Yes.
because what I realize is that when people don't have the financial intelligence that you share, that your system shares, they might suffer losses.
You are absolutely right, Tessie. You see, I must say, I'm not boasting, but you do need superior financial intelligence. I'm not saying my system or any other system. For you to handle volatile markets like this, you need to know something that others don't know. I'm not saying that nobody else knows, but this is where we were on the top. Let me recap. On the 31st of December, we said clearly that January the markets will correct. We did say that. And in January, the markets corrected. Now, as usual, and as in every correction we've seen in the past 25, 28 years, the correction never happens on the right spot. It always overspills.
Yeah.
Now, this week, 24 January to 28 January, it did overspill. But the sad thing is, when the markets bottomed out on Monday, just near noon, according to JP Morgan data, mom and pop investors liquidated 1.36 billion worth of stocks. And I can tell you they definitely cut loss because the market was the lowest point.
Yeah, but there you see, money is so emotional. And if we don't know what's coming next,
Correct.
We tend to do what is, what's right in front of our eyes.
Yes, and you know what happened, Tessie? As usual, which we have seen this so many times, I must stress. As usual, the big boys come to buy, and by 4 p.m., the Dow Jones bounced up to 99 points higher. And guess who was buying? The big boys and the hedge funds. And that is
so
clear.
When they buy when blood's on the streets and everything is cheap, it's a cheap sale.
Yes.
And then the small people, the retail investors panic and let go.
Let me explain to you.
And so
this scenario always happens when there is a major correction. We have seen it so many times year after year.
And you did warn us that it might happen in the beginning of the year.
And let me say this. The reason we started this retail program, not charging retail investors any performance fee, because we don't want retail investors to lose money like this. But it has happened once again.
But our followers, the program followers, seem to think that this is too good to be true, Ashwin, that we can make 15, 20% yields.
I'll tell you why they think that way.
Of the time.
I'll tell you why I think that way. Because all these years, retail investors have been, number one, following internet news, which is useless to us. Number two, they follow things that have already happened. They react on the market going up 1,000 points instead of or dropping 1,000 points or even going up 100 points, instead of going forward and reacting on what is going to happen. Can you see the difference, Tessie? Retail investors, number one, has got inferior financial intelligence and news. Secondly, they react on something. This is very important to understand, Tessie. Retail investors react on something that's already happened.
Yeah, but you see, they have this pain points that they carry, and it makes it difficult to trust again because of the losses
but the pain point is not due to our mistake; it's due to other people's mistakes.
So,
and thirdly,
too good to be true.
And thirdly, I tell you why they lose money.
History.
Thirdly, they lose money because they have this psychology of we buy when the market goes up and we sell when the market is dropping. Wrong, Tessie. You have been trading with me so long. We buy when the market drops. Our wish list came out on Monday, 24th January, when the Dow was dropping. We were buying. So it's the other way around. We buy when the market drops and we take profit when the market goes up. It's the other way around. So if you're a retail investor, and you do these three things wrongly, you keep on doing it wrongly,
Yeah.
I'm sorry to say this, no curses, but you will never make money. Because you can see again and again, whenever the market drops seriously, the big boys come in. Now that's where we come in, and our retail investors, I'm glad to boast, we're not panicking and they're in safe hands. And we were buying more for them on Monday. Monday, Tuesday, Wednesday, we were buying more for them. What were we buying? I'll give you a tip. One of the stocks we were buying heavily this week before earnings was Microsoft.
So you're talking about flows, right? This is a series
so
about
everyone,
flows.
This is a video about flows, okay?
Yeah, but it's seemingly swimming against the flow, going upstream.
Yes. So retail investors, I want them to understand. Retail
know?
investors are losing money because they're going against the flow.
Yeah.
Firstly, retail investors, when the market drops like this, you have to ask yourself, is this a crash or a correction?
Yeah, and
Secondly,
who's to tell the difference? You need to have some kind of a compass,
this is where you need professional advice. So
Yes.
if you think you can do it yourself, I'm sorry, good luck to you, because you don't have the financial intelligence we have.
Yeah.
We have an algorithm that is mining data 24/7.
And dark pool data.
And we have dark pool and option data. So we know what the big boys are doing. On Monday, 24th January at 1 p.m. in the morning, New York time, our algo alerted us that the people are coming to buy.
Yes.
And Monday, 24th January at 1 p.m. New York time, we were buying. And I tell you now, like I said, we were buying Microsoft before earnings. So what I'm trying to say is this. This video is about this. If you want to make money in the markets, you have got to know all the time about flows. Because if you want to make money, you have to. Otherwise, you will. If you don't know about the flows, Tessie, the retail investors will lose money like this. And then they say what? Oh, the markets are no good. People are no good. Don't blame the markets. Blame your tools. Okay? Now, let me tell you why I said this. So on Monday, we said the market's bottomed out. Now, further evidence. For the week ended Wednesday, okay, equity exchange traded funds and mutual funds saw inflows of 17.1 billion. Can you believe this? On Monday, they cut loss 1.36 billion. And on Wednesday, $17.1 billion worth of inflows come in. Can you see what we mean?
The institutional buyers came and bought, and the retailers flew out.
Correct, as usual. As usual, the small retailers became the sacrificial lamb.
Yeah.
Right? And one more thing. On Wednesday, ETFs alone saw inflows of 24.9 billion. So can you see whatever we've been saying is proven? We're not talking about the sentiment. We are talking about facts.
Yeah.
Let me remind everyone, we do not deal and trade on sentiment. We deal and trade on cold, hard facts. And we have the software to give us those cold, hard facts for us to make precise decisions. I'm not boasting, but it's a fact. I've proven to you. On Monday, the retail investors cut loss, and on Wednesday, the flows came in. Now, one more thing. For the year to date through January 26, equity ETFs and mutual funds saw an inflow of 84.16 billion, Tessie. Okay?
Mean numbers.
And those numbers do not include individual stocks and sales of stock derivatives. Can you see? 84 billion was only mutual funds and ETFs. What about individual stocks?
Yeah.
Now, just for everyone's sake, Microsoft earnings came out on Wednesday after market close. Okay? The stock dropped to $277. Okay?
Time to buy.
Now, let me tell you what happened. Microsoft ended the week at $308. Yeah. Can you see? Can you see
and
the opportunity?
Those who got spooked by this drop,
correct.
Ran.
Now, why do they get spooked? Why do they get spooked? Because ignorance leads to losses. The lack of information leads to losses. Like Warren Buffett says, when you don't know what you're doing, fear is caused by the fact that you don't know what you're doing. It's true. Why do people fear? Why do people doubt us and say, are you sure? Are you sure? Because they have lost money because of fear. They have lost money because of wrong decisions. I'm sorry, everyone, but we are not high-handed. We are confident because we have the kind of financial intelligence that the normal retail investor does not have, and is not prepared to pay for.
Yeah.
It's not prepared to pay for.
So you give
So,
us that compass.
Like I'm saying, Jesse, for $5,000 only, you are getting superior financial intelligence. That's why our retail investors are sitting tight, listening to us.
Yes, I'm grateful for you
to share. This is a fact. And I would like to everyone to realize that financial intelligence in markets like these, which will become more volatile as we go along. I said in my video in 31st December that markets will be very volatile and there'll be lots of corrections. So if you
there's a difference between gambling and investing.
Yes. We are not gambling. We are investing. But at the same time, we are swimming through the volatility using our financial intelligence. If you do not have superior financial intelligence, you will get killed in the volatility. And that is a fact. If you do not have superior financial intelligence, you will not survive this volatility. And we have just seen the proof on Monday when the mom and pop investors cut loss.
Yeah.
Now, let me put further proof in front of your eyes. Bank of America says that these latest inflows numbers show zero capitulation in equity positioning, meaning the market did not capitulate from equities. They did not pull out from equities. The big boys actually bought more, okay? Which clearly shows to you that this is just a correction. We have Bank of America saying there was zero capitulation.
That's a big word for pull out. That's a big word for pulling out.
Capitulation means pull out. There was zero capitulation means nobody pulled out.
Wow. So they knew what they were doing.
Yes. But then again, the retail investors, as you can clearly see in the proof, they did not know what was happening. The retail investors knew that the big boys are going to come in and buy. You think they would have cut loss?
Yeah.
Right? This is what I've been saying. We don't hard sell ourselves, but you need superior financial intelligence to make money in these kind of markets. You really do. But if you say, I don't want to pay for it, and I want free of charge, I'm sorry, we can't help you.
Yeah.
We can't help you. I'm sorry.
Yeah. Yeah.
We can't. So
what else about flows, Ashwin?
So one more thing. This week alone, before I sign off, this week alone, I want everyone to realize $13.5 billion went into the two largest ETFs in the market. One is the SPDR S&P 500 ETF, and the other one is the Invesco Triple Q Trust ETF. The SPDR ETF tracks the S&P 500 index, and the Invesco Triple Q Trust tracks the NASDAQ. And you see what people are doing. Before the stocks can climb individually, they're piling into the ETFs that trade the indexes because they clearly see the market going up.
Right.
That's what I'm saying. Volatility is unpredictable. But when you have quality financial intelligence, you will not fear volatility, and you will view volatility as the way to create new wealth, Tessie.
Right.
You see what I'm saying? You will view volatility as the way to create new wealth. You will not fear volatility. The investors on Monday, they feared volatility, they cut loss.
Yeah.
Very sad. That's very sad, because then they will say, we've got a bad experience in this market, never again. Actually, it's not nobody's fault. It is the investor's fault. If you let me repeat this. If you are going to rely on internet-based news that everyone knows, if you're going to rely on the rubbish news that everyone knows, if you're going to trade on things that have already happened,
or get confused by what they read on
because you
CNBC.
See, you know how they get confused? One guy says market going up, one guy says market going down. You don't have a neutral and professional viewpoint. And this is where we come. Honestly,
that's quite common, actually.
Yeah, that's quite common, but that's why the retail investors never make money, because that's quite common.
And then they come and challenge you, I'm sure.
My bank says this, my bank says that, so says this, how come you say this? You can't compare like this. Okay, you either listen to us or you don't. It's simple as that. Why? Because let me repeat, we have an algorithm that is 75% artificial intelligence, 25% human brain. We are the only system in the market that is 25% human brain. All the other algos in the market are 100% machine only. We have the emotional intelligence that the market requires, that investors require. You see, based on previous experience, based on past data, the machine algo will tell you, sell the market. Sell the market. Because the Fed is going to pull out, the market's going to crash. Well, guess what? The machine only are wrong.
Yeah.
Because I can tell you something else. The Fed is not going to allow the stock market to crash.
Yeah.
Let me tell you what's the anti. What is? Let me now give you for free a free tip on what's the reverse side of this Fed taper.
Mm.
The reason the Fed is tapering because inflation's gone up too much. Listen this carefully.
Yeah.
Inflation gone up too much. Now ask yourself the question: why has inflation gone up? Because of the supply chain problem. You have ships delayed. You have supply chain being disrupted.
Yeah.
So
yeah.
inflation
Logistics
happens
problem.
because there's not enough goods to go around, so the price goes up.
Yeah.
But let me give you the flip side. Once the virus is under control, okay, and the supply chains return to normal, what's going to happen? When ships can function normally, inflation, the supply chain goes back to normal, so goods and services will start flowing freely. And guess what? Because of that, prices will drop and inflation will drop as well. And then, do you then think that the Fed will increase rates 6 or 7 times this year? They will not be so panicky because they will say, oh, now inflation has dropped.
Mm.
And actually, please listen, the bond market is reflecting this sentiment, like it or not. It went to a high of 1.95, 1.91 the other day, last week. And now it is now below 185. So the bond market knows something that people don't understand. Before you panic about inflation, what is causing the inflation? So having said that, we have 2 scenarios here. One, it's a correction. Secondly, let's see if the Fed really raises interest rates by 6 times.
Right.
Because the last time Janet Yellen was in power, between 2013 and 2018, she did raise interest rates 5 times. Okay, so let's see if they do it.
Right.
But this time is different.
Yeah.
This time the circumstances are different.
Yeah.
Last time Janet Yellen cut interest rates after the subprime crisis.
Right.
This time is not due a subprime crisis. It's not a financial crisis. This is a health crisis. So it's different. Please understand the circumstances are different.
Yeah.
So let's see what happens. But what I'm trying to say is overall, if you don't change your thinking as a retail investor, you cannot make money. That is a fact. You have to react to information that's going to happen, not information that's already happened. If the market, this clearly shows you, if the market dropped 1,000 points, you will panic and say, oh, the market will drop some more. But actually, the market dropped 1,000 points and scared you and now going up. Everybody who started shorting the market on Monday based on a 1,000-point drop are now looking at their face and say, what the hell do I do? Because you are acting on information that's already happened. Don't do that.
Yeah.
Our algorithm acts on information that's going to happen.
Right.
When Microsoft
such a delight to listen to all this information.
Let me give you another fact. On Wednesday night at 5:30 p.m. New York time, after market close, Microsoft dropped to 277 per share. A normal investor will say, oh, we are panicking. And the reason Microsoft dropped to 277 per share, because instead of 50% profit for their cloud computing, the profit came in at 46%. So market was disappointed. So they sold the shares down. And guess what? We were smiling and we were buying more. We bought at 277, 280, 285, 288, 290, 292. You know why? Because 46% growth in cloud only in the last 3 months of 2021. What's the problem? So this time I made less than 50%. I still made, right? Okay? And what people don't understand is this. This is where we come in. They look at one factor, 46% growth in cloud, and the market sells down and they say, oh shit, isn't problem. What the people do not understand is this, if you've been watching our videos. Microsoft will be, and I say it here for free, Microsoft will be the biggest beneficiary of the metaverse. Please understand. So you see, why are we so confident? You may say we are arrogant. Because we understand the market. We understand the companies we are buying. If Microsoft now goes to $250 per share, we will recommend our clients, our high net worth clients, to buy $1 million each of these shares. We will. Okay? And our retail clients are now fantastically smiling because on Wednesday, when Microsoft went to 277, we were buying. We were buying. Okay? So this is what I mean. We're not being arrogant. We're not being boisterous. We are basing our facts and our marketing and our videos on facts, not on sentiment. And again, we look at things that are going to happen, not things that have already happened.
Thank you so much, Ashwin. How do we contact you?
I'll give you my email in a minute. Like I said, we are doing this retail program because we feel sad for mom and pop investors who cut loss like this and their hard-earned money is gone down the drain.
Yes.
That is why we started this retail program.
Yes.
We
There's
only charge you.
There's always space and place for people with big money. The banks will pander to them, fawn over them. Everybody with money somehow will find a way for themselves.
No, it's not that. Let me explain to you. The big boys have the financial space and the money to do a flip. If they were selling, they will cut loss and start buying. They have the financial space to do that. A mom and pop investor has got limited budget. They can't cut loss $10,000, $20,000.
They don't have easy access to financial intelligence.
That is very important.
Yes.
And I repeat, please, for those who think you can do it yourself, your internet news, listen to this, your CNBC, your internet news, your Wall Street Journal, even Bloomberg, it will not make you money in the big way because they are talking about things that have already happened. Please understand this. So the market dropped 1,000 points. Now the market went up, okay? On Friday, it went up, okay? So what next? What's going to happen in the market next? Right? This is the thing. This is why you buy financial intelligence from professionals, because we are talking about what's going to happen as stress, not what's not going to. So we have a financial package of $5,000 a year. And because these are small investors, we do not charge them any performance fee.
And you also, you must say also that you trade US stocks. Not Malaysian, not
stocks,
Singaporean.
We trade everything, actually.
Not local.
We trade everything. We trade US stocks, Hong Kong stocks, European stocks, Asian stocks, Singapore stocks, everything. But it doesn't matter what we trade in. We point and pick for you opportunities when they arise. It doesn't have to be whichever specific country. We look at mega trends. If the mega trend is arising in Singapore, we will buy a Singaporean stock. If the mega trend is arising in the US or Hong Kong, we will buy the stock. It doesn't matter which country. We focus on mega trends.
Okay.
So the internet will not tell you, this is the mega trend, go and buy. No, it will not do that. Our algorithm will tell you, this is a mega trend, go and buy.
Right.
Now, just before I end, Microsoft, everyone, free of charge for you, here are the tiger. Microsoft is a mega trend. Need I say more?
No.
Okay.
Metaverse.
Yes. So
Hashtag
I've already
metaverse.
given you a massive tip that can make you $10,000 at least this year. Okay. So can you see the difference? We charge you $5,000 a year, but we give you one tip that will make you $10,000. So I ask you a question, really, why are you worried about spending $5,000? I'll leave that. With that, I'll leave you. My email is ashwin@ppchk.net. Okay. On WhatsApp, you can contact us at bit.ly/algotrader. On Telegram, it's bit.ly/algofactory.
And your videos.
And please watch our videos at bit.ly/algowealth and subscribe to our YouTube channel.
Thank you so much. We'll see you again soon.
Thank you.